It's great to have your company for the weekly this Friday, the 9th of April. I'm Jessica Amir, a market analyst with Bell Direct. Well, the bulls, they're back. The Aussie share market rose for the third straight week, hitting its highest level in 13 months, dancing above 7,000 points for the first time since February 2020. So soon, newspapers may be focusing on the Australian share market hitting a new all-time high, given we're just a 3% puff off from the record high of 7,197 points. So what's fueling this new 5-day uptrend, and why is the market likely to gain momentum? Well, firstly, the global economy, it's reopening. Vaccines rolling out at a record pace in the US. Secondly, bond yields have stabilised. And a big part of this was because the US and central banks came out pledging to keep interest rates at record lows. Notably, this helped the tech sector claw out of a bear market. And thirdly, better than expected economic news continues to be factored in. So all sectors of the market rose this week. Of note, the tech sector rose over 7%. Tech darlings like Afterpay and Zip continue to break out of their downtrends. And airlines and travel stocks did really well. Qantas, Flight Centre, Webjet and AIZ jetted up, with international leisure flights taking off from the 19th of April between New Zealand and Australia. And the building and construction industry index hit a record high, fueled by the rush of the $15,000 homebuyer grant, which ended on the 31st of March, at a time when mortgages are going like hotcakes. So this all supports earnings growth in the biggest part of the market, banks, and boosts their share prices. So this is why Westpac shares hit a 13-month high. ANZ surged to a 2.5-year high, and Macquarie MQG hit an all-time high. Now let's move to the standout stocks in the top 200 to see if they've got more room to grow. Well, EML Payments, EML, rose the most Monday to Thursday, 15%, hitting an all-time high of 573. Now the payment card business will be taking over a European payment company and soon process a total of 90 billion payments per year. EML also wants to expand into other regions of the globe in 12 to 18 months, which is likely to again drive earnings growth. So their shares, EML shares, they're in a technical breakout and an uptrend. Macquarie says EML is a buy and will hit $6.20 in a year. So keep an eye on EML. Another standout, the buy now, pay later giant Afterpay, APT, up 14% this week to $120. But don't worry if you think you missed the boat. Remember, back in Feb, Afterpay was trading at $160. Now, Afterpay is now in a rebound, up 20% from its March low. So what's supporting this rally? Well, it's APT's global expansion and earnings upgrades. Now, Morgan Stanley says APT's launch and expansion into Europe and Asia is on track. App downloads tripled in the US in March, and its app downloads are now growing faster globally than any of the international peers. Now, Afterpay's total revenue is growing at a 57% compound annual growth rate. That's far ahead of their global peers too. So Morgan Stanley restamped APT as a buy, $149 target, even though it's trading 24 times than its FY22 revenue. The valuation may be justified. Moving to the top 500 stocks, Imugene IMU was a standout, up 33% to 16 cents. Now, this is an immuno-oncology company, and they advise that their anti-cancer human trial was able to reportedly make one patient's tumour completely disappear, while two other patients, their tumours remain unchanged, but all had zero adverse side effects, which is really important. So now Imugene will undertake their final and highest dose of their phase 1 trial with the Mayo Clinic in Arizona, USA. It's a buy-rated stock for Bill Potter, and its shares are in uptrend, so keep an eye on IMU. Now, moving to the 3 focus areas to watch next week. The first, we're in a new quarter and month. Rebalances are taking place. Fund managers will likely be readjusting portfolios, buying depressed stocks or buying into depressed stocks in sectors like tech and iron ore, and taking profits from banks, building and construction companies and airlines, which have been outperforming the market amid the economic reopening. Now this week, for the most traded stocks among Bell Direct clients, we've noticed that they've been doing this too. Qantas shares saw the most sell orders, while BHP and FMG were some of the most bought stocks. Although it's a new quarter as well. Keep in mind, April is historically the best performing month in the ASX 200. It's been that way since 1993, and the market generally rises 2.4% on average. Now, banks are the biggest part of the market, don't forget. Now, among them, Westpac rose the most out of the banks over the past 3 months. That's compared to the big four. But it's still got some catching up to do over the longer term. This is still on Westpac. Now, Morgan Stanley thinks WBC shares will up their ante, expecting the bank to soon announce $1 billion of cost savings over the next 3 years. So watch this space for WBC. Now, the second focus, guys and girls, for next week. Well, stocks that have rallied over the last 12 months from the COVID-19 low, because investors may be selling down stocks that they've held more than 12 months as they can take advantage of capital gain tax discounts. Now, the third focus area for next week, it's a big week for economic news next week. Tuesday, new home sales data tipped to rise 20% in March, according to Trading Economics, because employment is back at pre-pandemic levels and employers are looking to hire staff at the fastest pace seen in 12 years. Also, keep an eye out for consumer and business confidence data tipped to strengthen, and March employment data out on Thursday. Now, unemployment tipped to drop from 5.8 to 5.7%, with 35,000 people expected to have gained jobs. So if all of these numbers beat expectations, you could see a rally in the broad market. The focus, though, will be on banking and consumer spending shares. And that's the weekly. I'm Jessica Amir with Bell Direct. But from all of us, have a very happy and safe weekend. We'll see you on Monday. Bye for now.